a period of years and decades when you look at the transition that needs to occur. There's about 250 million cars in the U.S. car park. And so transitioning all of them is going to take some time. When you think about different use cases, also affordability, and that's why we're working so hard to make sure we're in a leadership position with battery technology so EVs are affordable for everyone. But it will happen in, I think, a little bit longer period, but it will happen.
So today, as you look at General Motors and the overall U.S. economy, are you reasonably comfortable that the U.S. economy can come back and you can do reasonably well this year? I assume you won't sell as many cars this year as last year, though.
No, we do think the market will be down this year in the United States. I think it's a little early to tell how the market will rebound. There's a lot of different factors. We sold, continued to sell even through the whole early months and weeks of COVID. We continued to sell. It's starting to recover, but we're not back to where we were or back to a comparable week last year. So we think it will be down, and it really depends, I think, on how successful we are in making sure we keep COVID maintained and we don't have a second spike. And so we're planning for a variety of scenarios to be ready, hoping for the best, but also planning for something a bit more conservative.
And that was General Motors Chairman and CEO Mary Barra speaking with David Rubenstein on Leadership Live. You can hear that program every week on Bloomberg Television. Futures heading lower this morning. S&P futures are down 31 points. Dow futures down 314. NASDAQ futures lower by 52 points. The DAX and Germany CAC and Paris both down 2.1%. 10-year Treasury up 15 seconds. The yield 0.82%. 2-year Treasury yield 0.21%. And the yield on the 30-year Treasury bond 1.57%. You're listening to Bloomberg Daybreak.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Pursuits look at luxury. Citadel.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Get your cook on with Asda, with Uncle Ben's rice 250 grams for just £1. And our Butcher's Selection chicken breast fillets only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
It's Tune In Sports on this day. On this day in 2013, Rafael Nadal wins another French Open title, making him the first man to win the same Grand Slam title 8 times. To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to standout stations and podcasts. Stay in touch with TuneIn.
Decision makers to a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, George Floyd remembered. I'm Christopher Cruz. George Floyd is being laid to rest today in Texas after nearly a week of services in 3 states. Correspondent Clayton Neville says the burial comes a day after a public viewing in Houston.
Thousands of people attended the public viewing at Fountain of Praise Church in Houston. George Floyd's brother, Felonious, grateful for the turnout.
I want to thank everybody who came out to see my brother and cheer him on the victory for his last lap.
The family pressing for police reform.
He had his life taken away when he shouldn't have been.
A private service will be held today at Fountain of Praise, followed by a burial in Pearland outside Houston. Clayton Neville, Houston.
Just days after Seattle's mayor and police chief promised a month-long moratorium on the use of a type of tear gas to disperse demonstrators, the department used it again during a protest late Sunday night. I'm Christopher Cruz.
It's a new disease making an unprecedented impact.
The job losses were widespread.
It is a stunningly historic moment.
Your best strategy?
Is this a market that's accepted reality?
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And up here in Moscow, Tiffany reported a first quarter loss per share that was wider than analysts were looking for. U.S. futures and European stocks are slumping as investors worry that global equity markets have run too far too fast. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 31 points. Dow futures down 313. NASDAQ futures down 53. The DAX in Germany's down 2.1%. 10-year Treasury up 15/30 seconds, yield 0.82%. The yield on the 2-year 0.21%. NYMEX crude oil is down 2% or 78 cents at $37.41 a barrel. COMEX gold is up 0.6% or $10.20 at $17.1520 an ounce. The euro 1.1273 against the dollar. The yen 108.03. That's a Bloomberg Business Flash. Now here's Amy Morris with more on what's going on around the world. Amy.
Thank you, Karen. Joe Biden slammed President Trump's handling of the economy, saying that the president inherited the longest economic expansion in history and squandered it. Biden cited the official declaration that the U.S. had entered a recession just as the coronavirus was starting to take hold in February. President Trump plans to resume campaign rallies this month. The campaign has not determined where the first rally will be since the country was locked down over the coronavirus. Just as North and South Korea are about to mark the 20th anniversary of their first leadership summit, North Korea is cutting communications with the South, apparently over leaflets critical of leader Kim Jong-un that had been sent across the border by anti anti-Pyongyang activists. Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Nathan.
All right, Amy, thank you. We are live from the Bloomberg Interactive Brokers Studios, where it's just before 6:49 on Wall Street. Time now to check what's going on in D.C. Some of the top stories in the nation's capital include congressional Democrats presenting a sweeping police reform bill in the wake of George Floyd's death, President Trump planning to resume his campaign rallies this month, and Attorney General William Barr saying the Secret Service did tell President Trump to go to the White House bunker during last week's protests that contradicted the president's account. Also making news, the president now saying he is open to gentler police tactics after more than a week of often tense protests in the nation's capital and around the world. Greg Vallier is with me now, Chief U.S. Policy Strategist at AGF Investments. Of course, this comment from the president came at that roundtable at the White House with law enforcement yesterday. Kind of a shift, I would think, from past rhetoric where the president has said maybe officers don't have to be so nice with criminal suspects. What do you make of how things have developed over the last couple of days here?
Well, two things, Nathan. Good morning. Number one, I'm sure Trump has seen the polls from the last 48 hours, and they're devastating, especially CNN showing Biden up by 14 points. I'm not quite sure I buy that poll, but I think Trump is probably trailing by 8, 9, 10 points. That's a lot. And maybe, secondly, he wanted to just diffuse a bit of the rhetoric. You know, I'm a law and order guy. I think this has backfired on him, and he might want to sound a little bit gentler in his approach.
Just sound a little bit gentler, or could this actually lead to real policy reforms that these protesters across the country have been demanding?
Well, I cannot see defunding the police. I think that most Democrats in private especially would reacting with horror. I mean, this would portray them as being maybe too soft. I think it would give Trump an opening. He could say that, you know, New York, L.A., where mayors are talking about taking funds away from police, that's the exact wrong thing to do. So I think a lot of Democrats, starting with Joe Biden, have moved pretty aggressively away from that position.
Yeah, it seems as though in a lot of ways, both candidates coming up in the November presidential election have openings here, don't they? I mean, with the rough response to the protest outside the White House last week potentially provides an opening for Joe Biden, while the president is trying to pin, as you mentioned, the defund the police slogan on Biden. How do you see this shaking out?
Well, you look at the polls, and again, this is a city where everybody watches the polls real carefully. It would show that Biden is viewed as having much better race relations, dealing better with those issues. So Biden clearly has an opening there. I think both candidates are going to try to see if they can find an opening on China. I think the jobs report last Friday gives Trump a little bit of an opening, although there's been some revision by the Bureau of Labor Statistics. I'm not sure the number was quite as good as it looked. So yes, both candidates have openings, but I'd say with just 5 months to go, Trump has to really make a strong comeback, and the only way he can do it, I think, is by going negative.
How do you see that playing out potentially? Does it play out in this issue that is, holding the zeitgeist right now, this issue of race relations and police brutality, or do you see other potential negative points that the president could
well, this is not going to be pretty, as we all know, Nathan, and I think that, the White House is going to portray Biden as someone who lacks the mental acuity, that he's maybe lost a step or two. They're going to talk about Biden and his son Hunter and their business dealings in Ukraine and China, so it's going to get nasty. There'll also be a refocus on the Obama-Biden investigations into Trump and all that stuff. We're going to dredge all that up again. The one thing I keep hearing from people in Washington that is troubling is a fear that this could be a disputed election, that because of mail-in ballots, which Trump despises and feels are rigged, what if we had a razor-thin result? And Trump said, I want to contest 2 or 3 states because of mail-in ballots. A disputed election, in my opinion, is not out of the question.
Is that something that you think is going to become more of a risk as we get closer to Election Day? Because you do start to hear more speculation that, with the president talking about things being rigged and raising questions about mail-in ballots, that could be an issue.
Well, it could be. We're all old enough to remember the year 2000 when Al Gore lost the presidency by 537 votes. I mean, so there is a precedent for an election going to the Supreme Court. Biden keeps talking about it. He keeps saying that this could be a fishy result. Trump keeps talking about it. So you hope it's not going to be a self-fulfilling prophecy. I think it would be a negative story for the country, obviously.
Now, one interesting element that the Biden campaign has put out there in recent days is trying to pin the economic recovery, the recession that we are now officially under, according to NBER, on the president, saying that the president's response to coronavirus made things worse than they could have been otherwise. Is that something that Biden could capitalize on here now, given the pain that we've been through this pandemic?
Well, maybe. I mean, Trump was the president during it, but I think, to be fair, as we got into early spring, it looked like the economy was still in good shape. The unemployment rate was really low. I'm not sure statistically it was the greatest economy in the history of America, but it was pretty good. So I'm not sure. I mean, there's a lot of stuff you can criticize Trump for, but I think his handling of the economy has been more than good. I think it's been quite good.
In our last 30 seconds here, the Senate Finance Committee is going to hold a hearing today on whether to extend jobless benefits during the pandemic. There's a question now with the way the market's going, whether to take the feet off the gas pedal here. What's your view?
Well, that's a good point. Could we see this diminished? Probably we'll still get a big bill by the end of July, very quickly. The White House wants a tax cut. Nancy Pelosi wants a lot of aid to state and local governments, and the congressional Republicans want some liability protection for companies that are being sued. So all the key camps have a reason for wanting a bill, so we'll get one, but I'm not sure how much unemployment benefits will be in this bill. That may be cut back.
Greg Vallier, as always, good getting your insights. Greg Vallier is Chief U.S. Policy Strategist at AGF Investments. Karen.
Nathan, thank you. It is 6:55 on Wall Street. Time for the Bloomberg NJIT STEM Report, brought to you by New Jersey Institute of Technology, a top 100 national university, and the latest U.S. News and World Report college rankings. Learn more at news.njit.edu. Let's see what's going on in science, technology, engineering, and math. The Trump administration has expressed little concern over climate change as it pursues American dominance in the energy market. Federal judges say it should be concerned. At least 6 times since President Trump took office, courts have rebuked the Interior Department for selling drilling rights or advancing oil projects without adequately considering the consequences to a warming planet. The U.S. and the European Union are taking radically different approaches to regulating user content on social media. Europe's goal is obliging tech companies to cut back on hate speech and disinformation. In the U.S., President Trump is seeking to strip the legal protections if platforms engage in potential censorship or in any political conduct. Social media rules in both countries were designed more than 20 years ago. Now the U.S. and EU are re-examining the guidelines. And some say we're seeing a little too much exuberance in the markets. Take the case of Nikola. The aspiring battery, electric, and hydrogen fuel cell truck maker debuted on the NASDAQ last week following a reverse merger. The stock more than doubled yesterday to hit a market cap of $26 billion. By the way, Nikola is forecasting 0 revenue this year. That's today's NJIT STEM Report. Futures this morning are lower. S&P futures are down about 28 points. Dow futures down 286. NASDAQ futures down 46. 10-year Treasury up 14 seconds. Yield 0.82%. Yield on the 2-year 0.21%. And NYMEX crude oil is down 1.9% at $37.45 a barrel. That's down 73 cents. Bloomberg Surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential conversations from Bloomberg.
You know that feeling when you get more than you expected?
like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
.com on the Bloomberg Business app and on Quick Take by Bloomberg. This is Bloomberg Radio.
The ECB will, within its mandate, continue to support the recovery with all appropriate measures.
What's wrong with adapting to what central bankers are doing these days? After all, we're seeking stability of the oil market.
One thing about imbalances is that at some point they reverse, and this is true about income inequality in the U.S. too.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance with equity futures negative. We're live on Bloomberg TV and radio alongside Tom Keene. I'm Jonathan Farrell together with Lisa Abramowitz. And Tom, the S&P 500 are raising the losses for 2020. Every single stock on that benchmark positive off the March 23rd low. And just a little reminder, this morning at least, that stocks can go down as well.
How strange to see red on the screen, but John, I'm just going to look at it as a blip now. We need to see a lot of proof there. I know it's a theme, John, we'll be looking at through this simulcast, the equity markets and, of course, the cross-asset analysis. John, I think a little history is in order. You need to go back to 1933. John, that's just before I entered Wall Street. You need to go back to 1933 to see the 53-day lift that we just saw.
Tom Keene in cash since the 1930s, an unbelievable position that he has held throughout the last century or so. Tom, you know what they call a bubble, an equity rally that you haven't participated in, and you have not participated in this one for a long, long time, Tom Keene.
This is really, really important. Bono Boasia, the great strategist at UBS, was with us on Surveillance an hour, 2 hours ago. And John, that was the distinction he made, is this has been a surge without a lot of volatility and without a lot of volume. Volume is missing, and that's something to talk to our esteemed guest about here in a moment.
Just the scent of exuberance in the last couple of days. Lisa, a little bit later this morning, there is a little bit of data we need to look out for.
Yeah, at 10 a.m., we're going to be getting the job openings data from the U.S., just looking for a sense of how quickly that's coming back online. Also, some of the things that I'm watching, really important. The Senate Finance Committee is going to be debating whether re-upping some of the additional unemployment benefits that people have. The market seems to be baking this in, that there will be some sort of extension, but Chuck Grassley, who leads up that committee in the Senate, coming out and saying perhaps this is a sign, the jobs report that we got on Friday, how much better than expected that jobs report was. Perhaps this is a sign that we should slow down and reconsider. And then, of course, the FOMC meeting does begin, John, today. And I'm curious on that front also, is the Fed going to dial back some of the expectations for its stimulus based on the better than expected data? Or are they going to give a grim outlook and say, we still need to do absolutely everything we can to bring financing, particularly to small and medium sized businesses?
Lisa, I imagine a lot of people are leaning towards the latter and not the former, at least in terms of expectations 24 hours out. Tom Keene, we do get some forecasts. We get a dot plot as well. I'm looking to see how far that long dot actually comes lower, how much they pull that down on the forecast for where the Fed thinks rates will be in the coming years.
And the key statistic there, John, I totally agree that's the great mystery of these meetings is we go 22-ish. We really begin with this meeting 18 months out to consider, I can't believe I'm saying this number, John, when you go back to 1933 like I do, to get out to 2022 is just really, really difficult. But it's sort of a first look at 22 meeting.
Tom Keene, lucky to have you with us in 2020. With equity futures a little bit lower this Tuesday morning, we're down by 0.9% on the S&P 500. A small correction, we're down around about 28 points at the moment after the rally of the last couple of weeks. We're really happy to say we can kick off this morning's program on Bloomberg TV and on Bloomberg Radio with Bob Doll of Nuveen Asset Management, the chief equity strategist. Bob, the breadth has improved, at least coming into today. But for every JP Morgan, there is a car rental company that is absolutely ripped. And I think a lot of people are trying to work out the distinction between a durable rotation and an unsustainable speculative rally over the last 2 months. Which one is it at the moment for you, Bob?
At the moment, in the short term, there's a little speculation. I think the market's a little ahead of itself. But, remember, the stock market went down 35% in a little more than a month before we got hardly any bad news about the economy. The stock market is a forward-looking discounting mechanism, and its rise now is telling us things are going to be better down the line. For most businesses, some won't come back, but for most businesses, given the flood of monetary and fiscal policy, the amount of cash that's sloshing around, the whole TINA and FOMO arguments, that's what's pushing stocks higher. They need a rest. Maybe today's that rest. We'll see how long it lasts.
Robert Dahl, there's the acclaimed Dahl meter. And the Dahl meter, folks, is the enthusiasm on board. What do you see in volume? What do you see in enthusiasm? What does Nuveen see in flows about whether this lift is loved or unloved?
It is all mediocre. That is the volume. You pointed that out a couple of minutes ago. What we are seeing, if you look inside volume, Tom, is upside volume is dominating downside volume. And so that's encouraging, despite the fact that overall volume numbers aren't as strong as you might like. As you know, some of the reasons stocks are going up are short covering. A lot of shorts put out there when it looked like this thing was going to go down, quote, forever, and they're still covering.
Bob, I'm struggling with the idea of FOMO and TINA, which makes sense given the fact that we are seeing an incredible amount of support from the Federal Reserve and from Congress. I'm trying to pair that with the idea that shares of Hertz and JCPenney and Chesapeake surged yesterday. These companies are all bankrupt or on the brink of bankruptcy. The shares of Hertz, for example, doubling yesterday. Why? Because 2020. Can you give us a sense of whether this is perhaps a harbinger of excessively frothy behavior that needs to get blown off in a little bit in order to make you confident to go back in?
Yes, I think the fact that those kinds of stocks, now a lot in those three stocks was short covering, no question about it. And that just pushes up because then the sellers just step out of the way and we get the whoosh up. But that is a sign in the short term. There's a little speculation going along. People are looking around and saying, okay, what hasn't moved? Let me go buy some of that. The FOMO and TINA arguments are not great long-term environments. You won't want somebody buying a stock because they've done their homework and they like the earnings and they like the valuation, not because they just think it's going to go up and so I better get in.
Let's talk about what's fueling that outside of central bank monetary policy and the stimulus we've seen. Bob, there's a huge focus on reopening here in New York City and globally. And as you go from shutdown to reopen, of course, naturally, the data sequentially will improve month on month. But I'm interested in the positive surprises. Macy's reporting earlier this morning that they've reopened stores and they're performing better than anticipated. Are you seeing enough positive surprises outside of the sequential month on month improvement beyond what you expected, Bob?
Yes, faster and bigger on the improvement side, no question about it. But I think of Lyft's announcement last week. Month over month, our rides are up 27%. Wow, I'm impressed. But don't forget, they're down 70% from a year ago. There are a lot of those kind of comparisons where, the month over month or the quarter over quarter are going to look phenomenal. We'll see that for third quarter GDP and probably fourth quarter GDP. The numbers be a big bounce from where we were, but don't forget, we're still, I say we've moved from the 10th to the third sub-basement. We've not yet found new high economic ground. That's going to be many quarters down the line.
Well, Bob, we've got to appreciate then what is the dominant driver of markets right now. Will it be the sequential improvement that we see in Macy's and other companies as well, or will it be the limits of normalization? In the short term, it's certainly the former, and I think the trillion-dollar question is when it starts to rotate to being the latter. Bob, how do you see that playing out?
I think it's frankly both. I'm not dodging a question. I think it's both. And then when you overlay what we talked about before, the most gargantuan and quickest policy response to a problem in modern times, even since Tom's been around. He hasn't seen this before. It's just gargantuan. You put that all together, it is very powerful. So you're getting both of those data elements, Jonathan.
Bob, we are going to be hearing from the Senate Finance Committee. They're debating re-upping some of the enhanced unemployment benefits. A lot of people saying that the market is pricing in that there will be an extension. What kind of disappointment do you expect or upside surprise if the Senate acts one way or another on these unemployment benefits?
I think the market is expecting another bill, including the benefits you just mentioned. Needless to say, the employment report of last Friday has to call into question, do we need another stimulus package? But I think Nancy Pelosi wants one. She told us that a month ago with a $3 trillion trial balloon. And the president sees November coming up on his calendar all too quick, and he wants a bill as well. So maybe it's a smaller bill, a trillion. I can't believe I'm saying that, smaller, but smaller than we might have gotten otherwise. But there's going to be some stuff from both sides. We will get some extension of the employment benefits, in my judgment. We'll get some litigation help from the Republican side, and we'll get some state and local aid from the Democratic side. It'll be a little bit of a Christmas tree bill, and we'll get one done. But there'll be a lot of loggerheads between here and there.
Hey, Bob, always great to catch up with you, sir. My best to you and the team, and to you and yours as well. Bob Dole of Nuveen. On policy as well, we'll catch up with Olivier Blanchard at the Peterson Institute a little bit later this morning to talk about policy. Tom Keene, let's talk about this market. Front and centre, the bond market returns with a bid. Yields coming in around about 4 or 5 basis points on a 10-year, 24 hours out and change away from that policy decision from the Fed, Tom.
Yeah, there's no question about that. And, John, I want to go beyond June 10th to the window dressing that's going to be done at June 30. I can't fathom the pressure for active managers who are behind this market surge, the pressure in June, John, to window dress constructively to begin to catch up as they go into year end in this truly historic and difficult year.
One of the worst quarters we've ever seen, followed one up by the best quarters we've seen since the 1930s, I think, Tom. It's been absolutely remarkable. And to your point, I think a lot of people envy us who didn't participate in this rally. Looking at this equity market right now, we have had quite a run on the S&P 500. At the close yesterday, raising the losses for 2020. Today, reminded the stocks can move lower as well. Equity futures this morning on the S&P 500, slightly negative relative to the performance we've had over the last several weeks. We are lower by 28 points on the S&P. We are down 0.9%. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramovitz. We're live on Bloomberg TV and on Bloomberg Radio. This is Bloomberg Surveillance.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. George Floyd, whose death has inspired a worldwide reckoning over racial injustice, will be buried in Houston today. During a vigil last night in Houston, his brother said activism cannot end with his funeral.
We have good police, but we have bad police. Amen. You can't sort them out, so we got to figure it out right now. All right. So, right now, I want everybody to start voting, going to council meetings and everything.
Floyd will be laid to rest in Houston next to his mother. New Jersey Governor Phil Murphy announced a grand jury will investigate the shooting death of an unarmed black man by a state trooper on May 23rd. Now, that was 2 days before Floyd was killed. Murphy says the state attorney general will release the dash cam footage of the police shooting death of Maurice Gordon on Memorial Day weekend. The New York legislature is expected to pass a criminal justice bill this week that would ban police chokeholds and allow the release of police disciplinary records. In Washington, House Speaker Nancy Pelosi, Senate Minority Leader Chuck Schumer, and other top Democrats knelt for 8 minutes and 46 seconds of silence to honor Floyd before they presented a sweeping police reform bill. Senate Majority Leader Mitch McConnell outright rejected any call to defund police departments.
They also know that well-trained law enforcement officers are an important part of creating safe communities, not something to defund or abolish.
Key Democrats, meanwhile, including presumptive presidential nominee Joe Biden, are distancing themselves from the defund push, which some supporters say is a symbolic commitment to end systemic racism and shift policing policies rather than an actual plan to eliminate law enforcement agencies. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Influential conversation.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
I think the risk is for the very near term. The paint rate is still up rather than down, but I think fundamentally at these levels of valuations, which are close to 23 times any realistic estimate of forward earnings, I think you're already in pretty stretched territory, so we would not be chasing the equity markets here.
Rainer Boeger, the chief strategist over at UBS, on the pain trade in this market. It has been painful if you haven't participated in the rally of the last couple of months. From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Bramwitz, we're live on Bloomberg TV and radio, counting you down and getting you in shape for the opening bout this Tuesday morning with the price action set up as follows on the S&P 500. We are negative. Yes, really, we are negative on S&P 500 futures, down 30 points and off by 0.9% after erasing all of the losses for 2020. Just a touch lighter on the benchmark this morning. In the bond market, curve steeper, yields higher. That's been the theme over the last couple of weeks. This morning, flip it and reverse it. We are flatter. We have yields lower. The 10-year down by 4 basis points to 0.83%, pushing 1%, going out to Friday at 1 point. Elsewhere in foreign exchange, where you would expect the bids to be, they are. The haven currencies, the Swissy and the Japanese yen outperforming in G10. Tom Keene, no surprise perhaps that on the day the equity market erased the losses on the S&P 500 for the year of 2020, the National Bureau of Economic Research confirmed that the recession officially started in February here in the United States. For this market, it has been a short, sharp reversal.
Well, no question about it. And to be clear, folks, that's normal for the NBER to come out months after the start. You don't really see it coming. You don't know it's there, and they've got to bring in the data and all that. I would point out we're beneath the highs that we're seeing. I call them the Valentine's Day's highs, plus or minus a day or two, but there we are. What we're going to try to do today on this simulcast, we welcome all of you on radio and television. We want to talk about the markets as we did with Bob Dahl. Olivier Blanchard scheduled to be with us with the Peterson Institute. But right now, the number one guy in the world on cycle research. This is really important research. Economists have an immense respect for it, and that it is so different than the way most economists look at the world. He is Lakshman Achathan of ECRI as well. Lakshman, right now you are seeing an upturn. How up is the upturn?
It's up. There's no doubt about it. And on the NBER and the time it takes for them to date a recession, which they said peaked in February, lightning speed. I think they had to do it because the end of the recession is already in sight, and so they had to really get off their seat and date the peak. The stock price upturn you guys are talking about, it's completely consistent with the economy's cyclical fundamentals. This was a super deep recession. In early April, 10 weeks ago, we put out a piece publicly. It's a nasty, short, and bitter recession. It's the end is happening this summer, and it's just because we had such a sharp decline that even a partial opening of the economy is going to lift us off those lows, and we're going to begin a recovery. It does not mean we're recovered. We have a long way to go.
Well, Lakshman, let's talk about that. You are an economic historian as well, and I just wonder what the parallels are for a moment like this and the risk of extrapolating the early performance out too far too quickly.
Yeah, you don't even have to be much of an historian. Just think about this century, okay? Everybody is hoping that it's 09-10 when we had a cyclical recovery that really was pretty self-feeding. Look, we had 2 or 3 steps forward, 1 step back, but generally it was a continuing recovery. Contrast that to the recovery out of 2001. People may forget that the recession began before the 9/11 attacks. It began a couple of quarters before. And so right after the lows that were seen in the market in September of 01, the market really took off. The recession ended by November, and we had a 20% rally. Okay, pretty good, consistent with an end of recession. But then, and here's where it gets a little nuanced, the cycle, while the recovery technically continued, the economy began to decelerate again. It's what we call a growth rate cycle slowdown. And the market itself, perhaps related to the valuations, went down to a new low in October of 02. So right now, it could go actually either way.
This could still be an 0103 scenario, which would technically still be a business cycle recovery, but a lot riskier for market participants.
Lakshman, one hallmark of this entire period has been insecurity, whether it's people being insecure after having just lost their jobs, lost someone they loved from the illness, from the pandemic, or for economists who are seeing their projections just absolutely shattered. And I'm wondering how insecure you are about projections and, frankly, about the economic data that's coming out with that huge miss on Friday with the jobs report, and just how instructive this data is. I mean, do you have confidence in these figures?
On direction, yeah. So as Tom said in the lead-in, we're a little different than a lot of other economists. Look, I know there's a warning label on all economic data that is produced. And, I mean, market prices are what they are. Survey data are what they are. Government data, hey, it's going to be revised. And you see some of the things that are going on with the unemployment data. We do have a recovery in employment, but it's hardly recovered. It's just a little bit off of the lows. And when we look at the nature of this recovery, those cyclical indicators, I have high conviction that this recovery is taking shape. There's a whole bunch of other dynamics that are coming in that are on the positive side, with the industrial cycle having bottomed globally, which are going to help. And on the negative side, you were alluding to some confidence. I think that's going to weigh on the pace of recovery, as will the nature of the job losses. Look, the vast majority of the job losses are in services. That's a completely different cyclical dynamic on the recovery.
Yeah, Lakshman, we've got to continue this conversation. Lakshman Akithan of ECRI on the recovery that we're starting to see very, very early stages of this recovery. And I think a lot of people feel the same way about the data we've had so far, Tom. Will we see the data this week validate the vast improvement we saw in the jobs report? A jobs report that we should stress has an asterisk next to it because of the ability or the difficulty of collecting this data. But nevertheless, that's the focus this week, I think, Tom.
Well, yeah, I mean, there's no question about that and how the Fed will interpret that. But again, I go back to what we saw over the weekend from economists, which is, John, we've made back about 15% of the employment collapse. Well, you know, if we add on another 15% next month, I believe 15 plus 15 is 30%. That gets you in the proper direction.
If we continue at this rate, sure, we can get there quickly. I'm not sure how many people have the confidence we will. Coming up on this program a little bit later today, we'll catch up with Olivier Blanchard of the Peterson Institute on this economy. Coming up next, Michael Gapin of Barclays, the chief U.S. economist, on the early stages of this recovery as New York and cities across the country slowly reopen. From New York this morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and Bloomberg Radio.
Debbie Hart is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason that companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, they've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
President of the Jewish Communal Fund, Zoya Raines, and her husband, Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
This is You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Emma, the UK's most awarded mattress in 2019. Try it out for 200 nights risk-free. Made in the UK. Go to emmamattress.co.uk to order now.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we are live on Bloomberg TV and Bloomberg Radio alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramovitz, counting you down to the opening bell in New York, 2 hours away this Tuesday morning. Good morning to you all. Let's get you that price action. Equity futures decline, erasing the gains of the last few weeks. Just a little bit, we take a bite out of them. We're down 30 points on the S&P 500, negative 0.9%. We are positive at the close in yesterday's session for the year, for 2020, still 4-5 percentage points on highs of the middle of February. Elsewhere, in foreign exchange, that risk aversion supporting a Swissy, a Japanese yen, those two haven currencies stronger against the US dollar in G10. Outside of that, just a day away from an FOMC rate decision, yields start to come in a little bit. The curve starts to flatten. Your 10-year yield down by 5 basis points. Tom Keene, we are down to 0.83%.
Well, 0.83% coming down from 0.92. But what I know, John, is we're under 1%, which means every listener and every viewer is getting absolutely crushed on a nominal and the real yield basis as well. With us right now, Michael Gapin. He's with Barclays and really just does outstanding work synthesizing the American economy. Very thoughtful essays. Michael, I noticed over the weekend that a lot of houses were really trying to retweak, readjust, recalibrate to an economic recovery. What did Barclays write over the weekend to readjust to more enthusiasm? Did you do that?
We did mainly on the path of the unemployment rate. What we had expected was, in economic jargon, a violation of Okun's law. We thought we would get a lot of excess firing. We felt that firms would go into this situation with a lot of layoffs, but with the expectation of bringing many workers back in the June, July, and August period. So you'd get excess firing and then some excess hiring. I think what we learned last week was that the second round effort of the payroll protection program was really effective at keeping workers onto payrolls or bringing workers back onto payrolls. So we're not getting as much excess firing as the claims data and other early data pointed to. So we revised that expectation and pulled the unemployment rate path lower. We left basically the rest of the forecast unchanged. So it's still a big hill to climb in terms of reducing unemployment, but we have a better start given where the May employment data came in.
Okay, I don't like chronology questions, Michael. I don't like the when of it, but I'm going to give you a when question right now. When in the summer are you going to have the kind of data to know that the job economy is recovering?
Well, I think I still trust generally the signal we get from the weekly claims data. There's going to be misses in this environment. We just have to live with that. I think directionally we are going there. So I'll tell you, give me one more solid employment report. So let's look at early July. Give me continued initial and continuing claims that suggest a trajectory of improvement. And then I think you have that. We put together a weekly activity index. It's the U.S. Weekly Activity Indicator, where we work with weekly data. We try and extract a signal from that and map it into GDP activity. That series bottomed in May 2nd and has been rising every week since then. So I do think the data already is telling you things troughed in April and have turned better in May. So the trajectory seems clear. Obviously, we're debating about the strength and the durability of that recovery.
Right. So, John, what that means, let me translate that, John Farrell, for you. What that means is July 10th at 10 a.m. is all clear.
I'm very happy that I have you here to translate these things for us all, Tom, not just for me. I'm not a patient man. I can't wait until July, Michael. I want to talk about the next couple of weeks. What do you need to see in the next couple of weeks to confirm, to validate that huge upside surprise on Friday wasn't just a big distortion because of the difficulties collecting the data right now?
So I think we would just need sequential improvement in the continuing claims data. Do continuing claims continue to ratchet lower? They took a move lower in 1 week. Can we continue to see those moving lower? Do initial claims data continue to come down? Both of these would suggest the rate of hiring is picking up and the pace of firing or the rate of job separation is slowing. What I'll also need is to see the confidence indicators come in. There's a Bloomberg Weekly Consumer Confidence Index that I know you're well aware of. Gives us a weekly read on consumer sentiment. We have the retail sales data that come on a weekly basis. What we need to know is the consumer emerging from this situation with confidence. We got a very good signal on that front, in our view, from the May auto sales data rebounding up to 12.2 million, certainly below pre-COVID run rates, but a sign to us that households are retaining confidence and are willing to spend accumulated income on balance sheets. So if we get that dual signal that the labor market is improving and consumers are emerging with some confidence, that can kickstart some virtuous cycle that takes the economy into the third quarter. And just to be clear, I think the employment report gives us a very clear signal about the near-term cyclical recovery. All the medium-term structural issues remain unresolved. That's still largely a question of science and medicine. But I think the data that we have in hand on the economic front do suggest a cyclical upturn in the third quarter is at hand.
Michael, given the fact that we are seeing an improvement in this variety of data, whether it's auto sales or the jobs report, do you agree with some, including Senator Chuck Grassley, who's come out and said they should hold off or perhaps take a pause before re-upping the unemployment benefits that have been enhanced, just in a knee-jerk response? They should take some time to really think about that. Do you agree?
I would say take a short time to think about that, yes. I mean, there's no immediate urgency to say get it done by the middle of June. We have until the end of July. But yes, the May employment report was a shocker and an upside surprise and a very desired number. We're happy to see that number. But there's still 19 million people out there, essentially, that need to be reemployed. The idea that we're going to get all of that done by the end of July just seems a high hill to climb. So I do think Congress should be prepared to extend unemployment benefits in some form. Additional help will be needed. They don't necessarily need to take that decision in the next 2 weeks, but take a short time, see what that July employment report might look like, but be ready to jump in and extend those benefits as necessary. I do think that will be needed. I would also say aid to states is an important additional factor as well.
Michael Gapin, a question that I would ask James Bullard, and both of you out of Indiana University. It's real simple. As economists, what does this booming stock market signal to you?
I think that the equity market is a forward-looking discount mechanism, and in general, the equity market is pricing in a recovery for the U.S. economy. It's not necessarily overly concerned about a second wave at this point on the coronavirus. It's just telling me that large companies are likely to gain market share and be the general winners coming out of this. We're also a very tech-heavy equity index. That's a sector that's viewed as likely to do well coming out of this. So I think it's telling you it's still likely to be a Main Street problem, not necessarily a Wall Street or big company problem, and that's fine. I would just say the S&P 500 isn't the entire economy. I'm not necessarily worried about where equities are versus our economic outlook. Equities will price what they do, and I'm okay with what that signal is saying. It's a little rich, of course.
Michael, let's push it forward just to wrap things up, and just quickly, if we can. Federal Reserve tomorrow. What are you dialed in on?
We think you'll get some additional information on asset purchases. We're not thinking the committee's there in terms of the readiness and the willingness to provide stronger forward guidance. But I do think that asset purchases have been tapered down to levels where markets might become concerned that the Fed will taper out entirely. So I think it's time for the Fed to give some communication on its monthly purchase rate of treasuries and MBS, and kind of repurpose those away from restoring market functioning to helping keep the overall policy stance accommodative. Beyond that, I think it'll be mild optimism given what we saw with the May employment report, but still a lot of concern about downside risk, uncertainty, and the Fed will conclude that it'll continue to use all available tools to support the recovery.
Michael Gapin, always great to catch up with you, sir. My best to the team over at Barclays. Michael Gapin there, the chief US economist over at Barclays Bank here in the United States. With equity futures down 28, Tom, that's no doubt a focus for the next 24 hours, the Fed's next move. And surely they can't be still talking about market functioning. Market functioning, we have gone way above and beyond market functioning with these programs at the Federal Reserve.
I'm so glad you bring that up. I mean, the markets have functioned beautifully. The liquidity identifiers have been absolutely fabulous. But, John, I thought Michael Gapin was fabulous there about, frankly, like President Trump, Chairman Powell's going to say, look, what can be wrong if the markets are forward-looking and voting like the market's voting right now? To your point earlier, John, all I'm looking for tomorrow is the tweaks on 21 and 22.
The forward guide, what does the dot plot look like? Lisa, I'm sure you'll push back a little bit here. There are some distortions, quite clearly, but wasn't that the objective of Fed policy, to divorce financial conditions from economic fundamentals? That was the objective of Fed policy several months ago, and I imagine to some degree it still is.
That still is, yes, because they want to get financing to companies. The question now is, are they doing too much, and perhaps whether Congress isn't catching up, leading to asset price inflation and nothing else? This idea of the widening gap between the wealthy and the poor. I will just build on something that Michael Gapin was saying as far as the monthly purchases by the Federal Reserve. The expectation, John, is for them to announce somewhere between $55 to $85 billion per month in purchases going forward. I do wonder on the long end of the Treasury curve whether that will be enough to sustain yields where they are.
Full coverage coming up tomorrow. Do we have a Fed special, Tom Keene, on Bloomberg TV and radio? Are you leading that?
I don't know if I'm leading it, but I'm there. Scarlett Fu will lead our coverage of our Fed special tomorrow with some good guests. We figured, John, if we can do the Fed special, maybe we can bring the real yield back.
I had a feeling you might say that, Tom Keene, just to stir the pot and cause a little bit of trouble, no doubt. You and I could talk about that in a commercial break. From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Bravitz. We're live on Bloomberg TV and radio. This is Bloomberg Surveillance with equity futures negative. We're down 27 points on the S&P 500. We are down by 0.8%. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Thank you, Tom. Good morning. In New Jersey, a grand jury will investigate the shooting death of Maurice Gordon by a state trooper on Memorial Day weekend, 2 days before George Floyd was killed. New Jersey Governor Phil Murphy says the state attorney general will release dash cam footage.
And I offer condolences to the families of every person who has died during a law enforcement encounter. Police have a responsibility to protect the people they serve, and that demands a high level of accountability when things go wrong.
The New York legislature is expected to pass a criminal justice bill this week banning police chokeholds and allowing the release of police disciplinary records. In Washington, House Speaker Nancy Pelosi, Senate Minority Leader Chuck Schumer, and other top Democrats knelt for 8 minutes and 46 seconds of silence to honor Floyd before they presented a sweeping police reform bill. Senate Majority Leader Mitch McConnell outright rejected any call to defund police departments.
I'm all for social work and mental health, but call me old-fashioned. I think you may actually want a police officer to stop a criminal.
Key Democrats, including presumptive presidential nominee Joe Biden, are distancing themselves from the defund push, which some supporters say is actually a symbolic commitment to end systemic racism and shift policing priorities rather than an actual plan to eliminate law enforcement agencies. Meanwhile, there's some concern now for the retail sector as more areas open post-coronavirus. Retail and tech data firm Coresight Research says as many as 25,000 stores in the U.S. could close permanently this year. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg. I'm Amy Morris. This is Bloomberg.
With the Bloomberg Business of Sports Report, I'm Charlie Pellett. New Orleans Saints quarterback Drew Brees has apologized for comments he made in an interview regarding his opposition to Colin Kaepernick's kneeling during the national anthem. And now his wife has apologized as well, saying, quote, "We are the problem." After Brees' comments aired last week, the quarterback was criticized on social media by high-profile athletes, including LeBron James. CrossFit CEO Greg Glassman is apologizing for insensitive tweets on the protests and coronavirus pandemic that drew backlash from consumers and led Reebok to end its partnership with the fitness company. In an emailed statement to Footwear News, Reebok said, quote, "Recently we have been in discussions regarding a new agreement. However, in light of recent events, we have made the decision to end our partnership with CrossFit HQ." And that's the Bloomberg Business of Sports Report. I'm Charlie Pellett.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Global News 24 hours.
There's a reason flash storage is called flash storage and not electronic non-volatile computer memory storage. From quick and efficient data retrieval to instant scalability, everything about IBM flash storage is fast. It's also cloud-ready and surprisingly affordable, with a recommended monthly price of £310 for 24 terabytes of all flash. Order by the 30th of June and pay nothing for 90 days. Find out more at ibm.biz/flash offer.
Get your cook on with Asda, with Uncle Ben's rice 250 grams for just £1. And our Butcher's Selection chicken breast fillets only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
The force is strong in my family. My father has it. I have it. You have that power too.
For the first time ever, stream the complete Skywalker saga, all in one place. 9 incredible films, one epic story, only on Disney+.
The Force will be with you, always.
The Skywalker Saga on Disney+, now streaming. 18+ subscription required. T's and C's apply.
Dear Dad, happy Father's Day. You are my rock, my go-to guy. Whenever I call, you're happy just to listen. You've always been there for me, by my side. I don't know how you put up with my piano playing all those years.
Hang on, kiddo. I'll listen in a sec.
I miss you. See you soon. Love you lots, Luce.
This Father's Day, send love straight to Dad's door with moonpig.com.
Download the app today.
We and every other transit agency are going to require federal aid to get us through 2020. About half of our revenue is based on fares and tolls.
Pat Foy, MTM chairman and CEO, the leader of the MTA here in New York City. The collective will it fade as the crisis fades? That is a big question for all of us right now. From New York, alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abravis. We are counting you down to an opening bell with the equity market just bouncing off session lows. We're down 23 points on the S&P 500, off by around about 0.7%. In the bond market, talked about this over the last couple of weeks. Curve steeper, yields higher. Today, curve flatter, yields lower. We're down 4 basis points on 10s to 0.83%. And in foreign exchange, reflecting that diminishing risk appetite, a Swiss that's stronger, a Japanese yen as well. A little bit of risk aversion, Tom, going against the grain over the last couple of weeks.
No question, a little shift here today, and we'll see how we get to the market open as well. And of course, through the day. One of the great things, folks, of working with John Ferro is it is a British view, and the British are clearly stunned at how the U.S. does depression. Our social policy has been extraordinary. McKinsey Global Research has been absolutely stunning. This is the McKinsey Global Institute, of the depth of their research country to country on issues such as poverty and the labor economy. They absolutely own the high ground on this. Susan Lunn out of Northwestern and Stanford is with the McKinsey Global Institute. Susan, I got one question. I'm thrilled you're on. Is our social theory working? Our Lockean individualistic theory in Washington, every man for himself, we're going to get through this without being like Europe, without being socialized. Is that theory working in this depression?
Hi, Tom. I'm thrilled to be here. Well, I wouldn't characterize that as the U.S. response. I think that we have been staying at home now for 2.5 months. We have the CARES Act, which provided unemployment benefits for freelancers and gig economy workers for the first time. We've provided individuals with direct payments from the government. So I actually think that our response, you've got to look at it, strengthened the social safety net in the U.S., which is pretty weak.
I mean, you've got a great global reach on this. Is Europe doing it better than us or not?
Well, I hate to say, Europe is doing it better than us. Europe has in place a lot of programs to enable employers to get money from the government not to lay off workers. Now, we've tried that in the U.S., the CARES Act, but small businesses, for instance, you can access the PPP program. You can't lay off workers. But Europe has had these in place for decades, and that's why in the last big crisis, the financial crisis, Germany, for instance, never saw its unemployment rate skyrocket like we did in the U.S. to 10%. So we might want to learn in the future. It makes a lot more sense to keep someone on the job and subsidize them for working than paying them to sit at home.
Susan, a statistic that you pointed out was that 1/3 of all jobs in America may be vulnerable, and about 80% of those are held by low-income individuals. I'm wondering what the broader effect is by the widening income gap that we're seeing in the United States going forward, both from an economic growth perspective as well as policy.
Well, I think it is a big concern. We know that we've had a lot of the population, a lot of people working who haven't seen real wage growth for decades now, and it looks like COVID could worsen that. We've also done some recent analysis looking at how many of the workers displaced from COVID may ultimately be displaced from automation and AI. And there's pretty significant overlap. So for some of these workers, their job may not come back. This may not be temporary, but rather permanent. And that just means that the U.S. needs more badly than ever a true coordinated program for helping individuals learn new skills, get into the jobs that are growing, and get out of hospitality, food service, retail clerks, and so on.
Susan, there is some talk, of a new industrial policy in the United States. Mr. Bob Lighthizer has talked about that. Ambassador Lighthizer has reflected on it as we discuss a little bit more about repatriating supply chains. Is that the direction of travel that you see things going in?
Wow, I can't believe we would use those words in connection with the U.S., but whatever you want to call it, yeah, I think that is the direction of travel. I think that the concept of what is essential for economic security has broadened. It used to mean airplanes and tanks, and I think now it might mean masks and pharmaceuticals.
Mask and pharmaceuticals is perhaps justified when you say, Susan. I think it's elsewhere that a lot of people are looking to see whether this goes beyond just pharmaceuticals and healthcare goods to make sure that we don't have to face this kind of crisis in this way. Once again, is it broader than that? Do you think it is?
Well, I think that research that we had done last year, and indeed we're going to be releasing something in July, so stay tuned, Tom, for our latest look at what's happening with global supply chains. But look, I think the trends have been towards regionalizing supply chains in many industries anyway. And this has been happening for the last 10 years, partly because wages in China have risen, partly because Chinese consumers buy a lot. So now a lot of companies that are in China are actually just there to sell to Chinese consumers. So a bunch of factors had started to put global supply chains in play, and one big trend was regionalizing. Now, that doesn't mean the production coming back to the U.S. per se. It could be Mexico, it could be Turkey and Poland for Europe, and so on. But I think that it's possible that coming out of this, beyond pharmaceuticals and PPE, Congress may be looking at things like semiconductors or rare earths or other strategic goods that they want to make sure the U.S. would have access to in any kind of global economic conditions.
Susan, fantastic to get your thoughts on some really important subjects that go beyond the immediate crisis that we've been living through. Susan Lunder, McKinsey Global Institute. Tom Keane, I'll keep it short and sweet. Watch this space. There's going to be a lot of work done here in the months to come.
It's going to be interesting to see on policy, and particularly wrapped around the election. I mean, just in the last 24 hours, John, the way the back and forth is heating up between President Trump and President Biden. And, of course, there's all the domestic issues on that, but you really wonder how they're going to approach their new vision given the tensions with China. It's going to be not, is it deciding part of the election? No, but it's really going to be interesting to see how they touch upon policy shifts in supply design.
Quickly becoming a key feature of it, that's for sure. Alongside Tom Keane, I'm Jonathan Ferro, together with Lisa Abramowitz. We're live on Bloomberg TV and on Bloomberg Radio. This is Bloomberg Surveillance, with equity futures just bouncing off the lows, down 24 points on the S&P 500, negative 0.75% in the bond market. The curve flatter, yields lower, reversing the trend of the last couple of weeks. Up next, weighing in on the bond market in America and the Federal Reserve decision tomorrow, Subhaj Rajappa of SocGen. This is Bloomberg.
Asset managers who seize change to launch new...
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo?
he is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
Mr. Darren Waller, good to have you.
Yes, sir, it's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
ECB will, within its mandate, continue to support the recovery with all appropriate measures.
What's wrong with adapting to what central bankers are doing these days? After all, we're seeking stability of the oil market.
One thing about imbalances is that at some point they reverse, and this is true about income inequality in the U.S. too.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance, Jonathan Farrell, Lisa Abramowitz, and Tom Keene. Thrilled you're with us on this simulcast. Good morning on television worldwide and across this nation. Good morning to the thousands of you listening at your homes, still socially distanced. Just so much going on here. Market pullback today. John will give you some detail on that. Seems correlated. A little bit of lower futures, higher yields as well. Looking forward to a Fed meeting, which maybe will be interesting, maybe will not be. We'll have to see how that works out. But within the mystery, huge success for those long in stocks. John, it has been 53 days off the low. It is only comparative back to 1933. And yet you and I are hearing from guest after guest after guest that there isn't an effervescence. There isn't a hysteria to this. It is measured.
Well, I don't know about that, Tom, because for every JP Morgan, there is a bankrupt car rental company absolutely surging. So is it a durable rotation into the more cyclical parts of the market, or is it a speculative phenomenon of the last couple of days? Tom, I described last week as an uncomfortable calm, a market that just kept pushing higher, even with the social unrest that was happening in America. Over the last couple of days, I've described it as an envious exuberance. Exuberant because we've started to see the riskier parts of this market really pick up, and envious because I know so many people that have not participated in this rally over the last couple of months. A lot of people, Tom Keene, missed it. And I'll repeat something that I said at the start of the hour, an hour ago, that it is only a bubble if it's a market rally that you did not participate in. And right now, this is a market rally coming into today, at least, that many people did not participate in.
And along with the idea of Hertz and the others and the speculation there, discount brokerage is shutting down because of huge volume, is the reality of a true rotation where the things that weren't moving for months and months and months have really picked up. Lisa, it's really quite extraordinary to see the non-FANGs simply do better day after day.
Yeah, and it takes me to the banks in particular, and they've had sort of a dual aspect that's propping them up. Both we have the steepening yield curve, the gap between shorter and longer term treasury yields, but we also have this expectation that consumers are going to be in better shape than previously expected because of the stimulus we've gotten from Congress, as well as the reopening and the benefits there. You know, Tom, the question that I have is, how do we even gauge fair value at a time when we have so much liquidity, when we have so much governmental support, at a time when valuations are rich based on historical standards? Does history matter?
Well, does history matter? We'll have to see. John, I've gotten in tons of mail in the last hour demanding the real yield return. John, give me a sense of the bond market right now that you see. If you were doing the real yield today before this Fed show, what would you focus on?
We talk about the steepness in the yield curve. If we were going to focus on sovereigns, we talk about the steepness in the Treasury curve over the last couple of weeks. How sustainable is it? And how comfortable the Federal Reserve is with it as well. I caught up with Vishy Thirupachura of Morgan Stanley recently, who said just in the near term, going into that Fed decision, they would take that steepener off just to wait and see what the Fed delivers this coming Wednesday, Tom.
Yeah, it'll be interesting to see. And of course, nuances in fixed income. No one can do that better than Societe Generale. Of course, with decades of history in the mathematics of derivatives, the dynamics of the fixed income market. And joining us now, Subrata Rajava, thrilled that she could be with us this morning. What's the simple chart right now, Subrata, that describes the fixed income market to you? Is it a spread or is it a dynamic? Is it a scattered out chart? What's the chart that says it all to you right now?
Well, for me, I think it's the steepness of the 530s part of the curve. I think that part of the curve has steepened quite dramatically. And I'm very much aligned with Vishy's view that over the near term, the 530s part of the curve seems to have gotten a little ahead of itself. And it seems to be in our publication, we point out, it's more correlated with equities than any of the fundamental drivers that you would assign to the steepness of the curve. So, you know, typically under the circumstances in an environment, especially heading into the Fed meeting, you should see a pause in the steepening, and that's exactly what you're seeing in the price action today.
So, Badra, just to build on that, what's the biggest headwind or several headwinds that you see to further steepness in the Treasury curve?
Well, I think the headwind is, of course, going to be weakness in the data. I think a lot of exuberance is built into the market, both in risky assets as well as in the bond markets. And really the risk is that if we do see a reversal in the data, if you do see weakness, then you should start seeing, a little bit more of a bull flattening of the curve, i.e. led by the back, rally led by the back end like you're seeing today.
So to be clear here, Subhadra, you don't think this is a supply-side story about extra supply from the Treasury over the last couple of months? You think this is just a risk appetite story that has led to people fleeing the 10s and 30s part of the curve? Is that the dominant driver for you?
I think it's a combination of factors. One, it's the supply story. Clearly, we've seen a lot of supply in 10s, 20s, and 30s from the Treasury, a lot more than the market had anticipated. The second is you're starting to see a decent amount of steepening in the bond curve because of stimulus and fiscal packages there. So as global yield curves steepen, I think that gives more room for Treasury yields to steepen as well. And third, I think it's a fundamental story with the front end peg to Fed expectations. When you see good sort of positive developments either on the data front or in risky assets, you should see the 530s part of the curve steepen and bond yields to rise on the optimism.
Subhadra, I got to say, this market confounds me in many ways, because if you have globally countries selling record amounts of debt, it is going to slow growth going forward. This, a lot of economists have been talking about. Inflation expectations are basically flat. Is the steepening in the yield curve hinting at more inflation, or is this the return of bond vigilantes? Are you going to get people pushing back and saying your debt is not worth what you think it is because you are selling so much of it and your economy isn't as strong?
That's a very good question, Lisa. I think that, for me, the focus is going to be on inflation and inflation expectations. I think, broadly speaking, the 10-year part of the curve and beyond should really trade very much in line with fundamentals. If you do see a steepening of the curve, either the 2s10s or the 530s in the back, of a rise in inflation as well as inflation expectations, then I think that's a good thing. I mean, the topic of bond vigilantes, I think, is being played out more around the supply episode. So when you see supply coming into the market, the market participants want a little bit of a concession. But broadly speaking, I don't think that's the real story. The real story is going to be on the inflation as well as inflation expectation side. As long as we see a gradual repricing higher of inflation expectations, then the Fed's going to be tolerant of a steeper curve.
Subhadra, I'm looking right now at a 10-year yield of 0.83%. What's the upper end that the Fed will tolerate? Do we have a sense of how high they would like to even see it go versus the expense of the United States to actually manage its debt at those higher costs?
I think that's really the crucial question in this particular cycle, or in this particular recession, is that we're seeing a tremendous amount of fiscal stimulus, and deficits are at close to $3.4 trillion for this, and you're going to see that continue to rise over the upcoming years. So the Fed is definitely concerned about, yes, it's not part of their mandate, but I think they are focused on the fiscal side of the equation. So for the most part, I think that broadly speaking, the Fed is going to be supportive and keep yields somewhat anchored under these circumstances.
Subhadra Japa of SocGen on this bond market. Lisa Abramowitz wishing it was the 1980s and we had the days of the bond vigilantes. You reminiscing about the bond vigilantes this morning, Lisa?
Well, it just would make more sense to me. I mean, you think about supply demand. When people say the fundamentals in the bond market, what fundamentals are we talking about? Are we talking about the massive supply? Are we talking about the fundamental premise that the Fed is going to buy whatever the U.S. sells? Are we talking about the fundamentals of inflation? It's just hard to wrap your mind around a market that ceases to be a market at this point, John.
Central banks slaughtered the bond vigilantes, didn't they, Tom? Can they make a comeback?
It's going to be fascinating. So Subhadra had in her research, John, the actual Fed acquisitions of all this nationalized paper. They're nationalizing. And to be clear, it's not the gloom that you get from the Fed gloom crew. But nevertheless, you're right. It's a completely artificial environment. With that said, John, I've got too much respect for the bid ask. I'm like Bob Dole, I thought was brilliant today with Nuveen. The market is the market. And the market's saying something, and everybody's trying to rationalize it. The smartest thing I heard this week was Stan Druckenmiller. And Stan just said, I blew it. I missed it. There's not enough people out there like me, triple leveraged all cash, who have blown it. I missed it.
You feel good because Stan's with you, Tom. That's cute.
I just wish I had his checkbook.
Don't we all? Don't we all? From New York this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance live on Bloomberg TV and on Bloomberg Radio. Let's get you some of the price action, shall we? Equity futures are negative on the S&P 500, erasing some of the recent gains after erasing the losses for 2020 on the S&P 500. Off the March 23rd low, every single stock on the S&P 500 in positive territory. This morning we're lower. We're down 25 and we're off by 0.8%. Coming up on the program, we'll be catching up with Olivier Blanchard of the Peterson Institute on this economy and your Federal Reserve decision just 24 hours away. From New York, this is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. It is happening slowly, but it is happening. Americans getting back to work. New York City started reopening its doors exactly 100 days after the state's first case of COVID-19. Now, Governor Andrew Cuomo says infections are at the lowest level since the pandemic began.
We went from the worst situation in the nation, frankly, one of the worst situations on the globe, to not only flattening the curve, but to bending the curve.
At its peak, the virus killed more than 500 people a day in New York City in early to mid-April. The number has since dropped below 24. The retail industry may be one of the hardest hit from the virus. Coresight Research says as many as 25,000 U.S. stores could close permanently because of the pandemic. Last month's surprise job gains are leading some Republicans to question if there needs to be another stimulus measure to offset the impact of the pandemic. Senators will discuss today whether to extend jobless benefits, which are set to expire next month. Joe Biden has slammed President Trump's handling of the economy. He says the president inherited the longest economic expansion in history from the Obama-Biden administration, but Biden accused President Trump of turning his back on the middle class with an agenda that helps corporations and the wealthy. George Floyd, whose death has inspired a worldwide reckoning over racial injustice, is to be buried in Houston today. Floyd will be laid to rest next to his mother. Floyd's death sparked international protests and drew new attention to the treatment of African Americans in the U.S. by police and by the criminal justice system. His funeral will be today. It will be private. It is in Houston. Some 6,000 people attended last night's public memorial service in Houston. Live from the Bloomberg Interactive Broker Studios. This is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts. I'm Amy Morris. This is Bloomberg.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our number one priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Influential conversations from Bloomberg.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, This is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
A police officer.
Someone who protects the people.
Protects the vulnerable.
Focused on doing the right thing.
Building trust in your community.
Representing one. Representing all.
Someone who is there in times of uncertainty.
Every day is different.
As a police officer,
you can make an impact.
Now's the time to make your difference. Become one of the 20,000 new officers. Search Join the Police.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
I don't think that the Fed is yet ready to move to yield curve control, particularly that since there remains a great deal of uncertainty over the fiscal policy, and they don't want to be seen as playing in that political debate.
Adam Poston of the Peterston Institute ahead of the Federal Reserve decision. That is coming up tomorrow. Full coverage on Bloomberg TV and radio, led by Scarlett Fu and Tom Keane. Alongside Tom Keane, I'm Jonathan Ferro. Together with Lisa Abramowitz, this is Bloomberg Surveillance, getting you in shape for the price action of the morning and the opening bell just around the corner. 1 hour and 12 minutes away, with equity futures just off the lows of the session, down 24 and off by 0.75% on the S&P 500. Futures just above 3,200 on the S&P. In the bond market, speaking of the yield curve, not steeper, flatter, yields not higher, they are lower on the session this morning. Your 10-year yield comes in 4 basis points to 0.83%. And Tom, all quite intuitive this morning. Risk appetite taking a little bit of a punch. The Swissy stronger, the Japanese yen stronger as well.
No question about that. I like, John, how you picked out the Adam Posen side on yield curve control. Of course, that's in the fixed income market. How far out the yield curve can the Fed actually affect the market? We'll speak with Olivier Blanchard about that here in a bit. But right now on price earnings ratio control, Gina Martin Adams with Bloomberg Intelligence, of course, running all of our equity strategy as well. I mean, I guess, Gina, if the Fed could, they'd like to put a control on the equity market. How out of control are stocks?
Yeah, it's a great question. I think that stocks actually are trading at levels that are reasonable considering what the Fed has done. And by that I mean when we run our model, which includes components such as the yield curve, such as corporate credit spreads, anticipated earnings growth over the next 24 months, we find that a reasonable multiple for the equity market is just under 22 times trailing earnings. So what the market has done is re-rated given the extraordinary policy accommodation that we've seen. Now, going forward, we've already seen that re-rating. So what drives stocks going forward? Well, it's unlikely the Fed is going to do a lot more. Obviously, this yield curve control is the big topic of this week, but how much does that really push down rates? Will we see the yield curve become more upward sloping in that environment is a huge question, especially for the financial sector. But the market is re-rated based upon what the Fed has done, based upon this extraordinarily accommodative policy environment. And now we're looking at the next steps for stocks probably have to be earnings related. We need to start to see some signs of recovery. We may have started to see that last week with the employment report, but we're looking for a little bit of follow through in coming weeks to really confirm that, hey, the recovery is starting, it's likely to sustain, and that could keep the bull running.
So, Gina, you be the forward-looking strategist, and I'll be a strategist over at Hindsight Capital, explaining things neatly about what we've already seen. Obviously, the market can bottom long before the economy does. We can see that in the way things have played out already, and quite clearly, before the economy picks up, you start to see the PE ratio accelerate away in a way that looks like this market is incredibly overvalued. And you've hit the nail on the head. It is now about earnings expectations. Can you help us all understand, help our audience understand where earnings expectations are right now and where you think they're going relative to the positive surprises we're seeing in the early reopening?
Yeah, it's been really interesting because I think that analyst expectations are now actually too low. If you look at your average earnings recovery coming out of recession in the post-World War II experience, your average recovery is about 10% growth in EPS in the first 12 months out of recession. Right now, analysts are forecasting 1.5% growth starting in the third quarter of this year. In our back-of-the-envelope calculations, which suggest the market is now pricing about 2% growth. I think you can get at least half the pace of the average recovery of 5%. That only requires a tiny improvement in revenue growth because you get a ton of operating leverage given the amount of cost cuts that companies have gone through to actually produce mid-single-digit EPS growth. If the employment report is a precursor to the rate of improvement that we're going to see in the economy, all of us will be too low. And all of us are going to be too low because just the devastating declines in the first half of this year make next year almost assured to be double-digit growth. It's really a question of what happens in the second half of this year, and can we start to climb out? Analysts are forecasting double-digit declines in earnings on a year-over-year basis for the whole second half of this year. So if we start to see a faster than expected recovery emerge and that recovery endures, which is another critical question, then we probably will see analyst estimates start to be revised up. And indeed, over the last week, we did start to see analyst expectations for the second half of this year start to tick up. It's a tiny, tiny tick, but it could be the beginnings of something of a more positive trend emerging for estimate revisions, which would be the first time since December of last year, frankly.
Gina, this is really important, and I want to sit here for a second. In other words, are you saying that equity valuations where they are not adequately pricing in the extent of the recovery to the upside, and that there is a significant leg higher in stocks just based on the fundamentals of earnings that were expected, or the surprise that you are perhaps seeing?
I'm saying there could be. What I'm saying is if we do see a persistence of recovery in the economic data, then yes, stocks are only anticipating right now about a 2% recovery in earnings growth over the course of the next 12 months following the end of the second quarter. We could very easily see 5 to 10% just upon an improvement in economic growth, especially given the second half of this year where expectations are for persistent declines and very, very negative declines relative to the pace of growth that we experienced a year ago. Now, the other thing to consider is the fact that we would argue you have not had valuation expansion on an anticipation of better earnings at all. As a matter of fact, the vast majority of the valuation expansion that we've experienced so far is because of lower rates and tightening credit spreads since the March low. There is a component to our valuation model that suggests, if you see an improvement in the 24-month earnings outlook, if we get an improvement in the second half and that's expected to endure throughout 2021 and even into 2022, really sparking a more durable economic recovery, then you very well could see valuations even expand more than our model would suggest. I think that's a little bit of a long shot at this point in time for us to anticipate, really getting a lot of visibility into late 2021, 2022, but it's not beyond the realm of possibility.
Gina Martin-Adams of Bloomberg Intelligence, our chief equity strategist on this equity market, outlining one of the more constructive views about earnings estimates in the months to come and what we could see. Gina, thank you very much. Tom, I don't think it should be lost on anyone. It is 8:25 Eastern time. This show began at 7 Eastern. In the last 1 hour and 25 minutes, hardly anyone has mentioned coronavirus or COVID-19. And the question of the moment for me is how market participants will respond to an increase in the infection rate. We're seeing that in several states across the United States of America at the moment. I'm just wondering whether this market has moved on, whether it responds negatively to that if we see it more in the coming weeks or not. But hardly anyone is discussing it anymore. It's just like this market has moved on.
I really take your point, John, but I do want to mention it's not several states. I thought the Washington Post summarizes beautifully this morning. John, it is 14 states in Puerto Rico. It's really quite extraordinary. And as we talked way earlier this morning, it's about the hospital beds in those states. And there's a fewer beds there, to say the least.
Ken Vexler of Acumen Management has written wonderfully on that in the last couple of weeks. From New York this morning, good morning. This is Bloomberg.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't, and I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones, and you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
At Lloyds Bank, we know that money is a concern for a lot of people during this time.
I'm really worried about the business. I'm worrying about you. And I think that's changing me. And I'm worried that somewhere along the line you might not love me anymore.
Oh, that's not true.
Whatever's playing on your mind at the moment, Lloyds Bank, in partnership with Mental Health UK, can offer you support and advice. Visit lloydsbank.com/mentalhealth.
From New York, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramowitz. From New York this morning, good morning to you all. 1 hour away from the opening bell in New York City, with equity futures bouncing off the lows, still down 23 points on a session. We are negative 0.75%, just above 3,200 on S&P 500 futures. In the bond market, Treasury yields lower, the curve flatter. We're down 4 basis points on a 10-year to 0.83%, relatively unchanged on twos. A nice bit on a 30. We come down 6 basis points, just south of 160 on a 30-year yield in the United States of America, as we count you down to that Fed decision with yield curve control very much the topic of the moment in foreign exchange. What do we see? A reflection of that risk aversion this morning. A stronger Swissy, a stronger Japanese yen, Tom. That's the theme of the market at the moment, just a bit of risk aversion, and you see it throughout the asset classes, from bonds to FX to equities as well.
And of course, all of this market gyration and the historical moment we're in, John, is wrapped around theory. John, it's so good for me to be at home here in New York because I'm near my vast library. I had the intern here go back deep into the archives. And John, in Olivier Blanchard, Macroeconomics, my edition is a little younger, is John on page 94. Here is Professor Blanchard. May I quote, John?
Of course, you may. Go on.
And when you feel really confident, put on a bow tie and go explain events on TV. Why do so many TV economists actually wear bow ties is a mystery. The gospel, according to Olivier Blanchard, of course, that out of his classic, and that's the quote out of his classic book on economics. He is, Olivier Blanchard, of course, an esteemed tenure at the International Monetary Fund as chief economist, studying under Stanley Fischer at his Massachusetts Institute of Technology, and now at the Peterson Institute, holding court with Adam Posen. Professor Blanchard, honored to have you with us today. You are definitive, and you have been wonderful. You have been definitive, Olivier, in saying we must have the courage to reflate. With the years that you've studied this topic, do we have the ability, led by Jerome Powell, to reflate ourselves out of this low interest rate regime?
I do not care too much about what happens to interest rates. I care about what happens to the economy. And it may well be that we need to have very low rates for a long time. That's not a catastrophe, but on your question, yes, I think we can reflate. I think we can go back, not quite to the old normal, but to something not far from it, and we can probably go there fairly quickly.
You wrote, Olivier, and you spoke at the American Economic Association a year and a half ago, about our public debt. Are we nationalizing our public debt? Have we messed up our bond markets so much with this Fed action that it's irreparable?
Well, on this we surely disagree. I think there are two issues, the level of debt, and I think we were wise in this case to spend what we needed to spend. And yes, there'll be higher debt later, but it's not catastrophic at all because the interest rates are low. And then on the central banks, they did what they had to do, which is they're not trying to make life nice for the government. They are basically trying to push the economy up. And the result of this is that they have very low rates, which is the right thing to do. And one of the channels is that it makes the life of the government a bit better than it would otherwise. So, yes, I think both fiscal and the monetary authorities at this stage in most countries are doing the right thing. I'm not terribly worried.
Tom Keene, can we just confirm that you don't actually have an intern at home, and Mrs. Keene is the one that you tell to go and get the books from the bookshelf?
No, we're very lucky. We were going to do an extern and a virtual intern kind of thing like a lot of corporations are doing, and we are able to desanitize the house so that we're able to get an intern in.
That's very thoughtful of you, Tom. That is very thoughtful. I imagine HR is going to reach out very shortly to find out what on earth is going on at Casa Keene very shortly. Olivier, it's fantastic to have you with us on the program. Tom's question on debt, I think, is an important one. We have the debt on the official sector balance sheets, and then we have the debt that has increased on private sector balance sheets. I want to pose the following question to you, thinking about the latter and not the former. A lot of companies have taken on a significant amount of debt over the last several months. Olivier, how does that shape your thoughts about how this economy recovers over the next several years?
I think that's one of the issues we have to watch out for. I think it's more of an issue for the small and medium-sized firms, and some of them should be given a break. I mean, if they accumulated debt because they had cost, even because they were closed, but they still had cost, then there should be a way of helping them out. This could be done by just forgetting some of the debt to the extent that they owe it to a state, or it could be that they may need to restructure, and then the debt has to be, decreased in value or forgotten or forgiven. I think that's one of the issues that we're going to have to deal with. There are going to be many small firms which are going to be in trouble partly because of the debt they had before, but also because of the debt they have accumulated since then. So one of the issues which I wanted to discuss with you is, and one of the things that we have pushed with two colleagues, is the notion that the normal way of restructuring debt, which is a fairly heavy way, may well be overwhelmed by the amount of potential restructurings which are going to have to be done. And so one of the things that we propose is a simpler restructuring process in which at least the part of the debt which is due to the state would be basically automatically adjusted rather than as a result of bargaining between the state, the firm, and the banks. But in short, this is a big issue, I think, mostly for the small and medium-sized firms.
Olivier, let's build on what you're saying on the proposal where there's sort of a mathematical haircut that all debt owners have to take and that companies can just accept into their balance sheets in order to reduce their debt load. What kind of disruption would that lead, given the fact that the holders of this debt are pensions, are foundations, are state and local governments? The fact that this is not a zero sum, it's not that you could just sort of cut one side of the balance sheet and everything is fine.
I think you're right. And when you decrease the value of a debt, you make the debtor better off, but you make the creditor worse off. It's very hard to know how many firms will have to be restructured. When we're talking about very large firms, then that becomes a big issue for the firms which hold the debt. I think here we're talking about a very large number of very small firms. And in many cases, these firms are viable. I mean, if you take restaurants, once the pandemic is gone and physical distancing is not an issue, restaurants should be able to do more or less what they were doing. So what we need to forgive is a relatively small amount of debt. My sense, it's very hard to do computations at this stage, but my sense is if we were to restructure the debt of the small and medium-sized firms which need restructuring, which is clearly not all of them, this is something which is very tractable for whoever holds the debt on the other side. For the small and medium-sized firms, it's the banks, and the banks are, where before the virus came, were in fairly good shape from that point of view, so they can absorb, is my sense, the loss that would come from restructuring the debt of the small firms.
Professor Blanchard, Bloomberg Surveillance has talked to Paul Deguar of LSE, Willem Bouter, of course, about the changes in Europe. We have seen Macron and Merkel really speak about a new unified fiscal effort in Europe. Do you buy it? Are we going to see finally some form of mutualization and union on the fiscal side in Europe?
Yes, we are going to see some form of mutualization and transfers. I mean, the project which is in play will happen. In what form exactly, I don't know. Whether it will come in time to help with COVID recovery, I'm skeptical. That it will have the form that people who pushed it in the first place, is it going to have that form? No, I'm not sure. But it is still an enormous first step. It's actually two steps. I mean, what I was hoping for was mutualization, the issuance of debt by the EU in some form. And that's going to happen. But they did more than that. I thought that they would do this and then they would basically just have each country get its share of the debt, of the proceeds from the debt sale, and go from there. The plan as it is has mutualization and transfers, which is that some countries will get more than their share if they can justify it. This is very ambitious. I suspect the final product, as always, is not going to be exactly what we dreamed of. But yes, I think symbolically it's terribly important. Once a program like this is in place, once the EU budget can, the EU can issue debt on its own and use the money in various ways, very hard to go back. So again, it's going to be very bumpy, but this is genuine progress. This is change.
Olivier Blanchard at the Peterson Institute. Olivier, fantastic to catch up with you, sir. Thank you very much for your input. We look forward to getting you back on the show very soon. Tom, it's a really, really important point that Olivier is making. If we can create the mechanism to have some kind of fiscal transfer on the continent, it's a huge step forward. But Olivier himself acknowledges also the timing of all of this. If we're seriously squabbling down in Washington about the next steps on the fiscal side of things, think about what is playing out in Europe at the moment. Even if they agree on a mechanism for some kind of fiscal transfer and all countries on the continent get behind it, this capital won't be deployed until the new year. Now, if we were talking about every other geography and the next fiscal steps, and you told me they were going to wait several months before they went forward with their big effort, You would say that was too little, far too late. That's where Europe is at right now, and I understand that relative to expectations, it's a very low bar, and Europe has made some improvements. Germany has got on board, but we're still not there yet, Tom, and we still risk permanent damage on the continent.
Yeah, no question about it. And what's so important here, John, is from the pandemic of, let's call it late February, early March, May 15th and June 1st were a mystery. From here, getting out to August and September, I would argue, John, maybe an even greater mystery in that linkage of investment and finance over to economics. Where we're going to be Labor Day, John, that's a holiday after September 1st. Where we're going to be Labor Day, I don't know.
I have been here about 4 or 5 years, Tom. Just remember that. You know, I haven't been here 5 minutes. I know the national holidays. I've got familiar with them. It has been that long. We're in year 5, I think, now, Tom. Time flies. And I love being with you, too. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Abramowitz, this is Bloomberg Surveillance with equity futures negative. We're down 30 points and off by 1%. This is Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. George Floyd will be laid to rest today in Houston. The unarmed black man's death sparked massive protests across the country, demanding police reform and accountability. More than 6,000 people turned out for a vigil in his honor last night. Bail was set as high as $1.25 million for the former Minneapolis police officer who was charged with second-degree murder in Floyd's death. Derek Chauvin did not post bail. He is expected to enter a plea at his next court appearance, which is June 29th. There are calls now in many communities to defund police departments. Washington, D.C. Mayor Muriel Bowser says defund does not mean eliminate law enforcement.
People have different meanings for what they mean when they say defund the police. And as I've listened and read, I think most people are saying that they want reform and that they want good policing.
President Trump and his allies point to the movement as a dangerous example of Democratic overreach. But key Democrats, including Joe Biden, are also distancing themselves from that term while voicing support for police reform. House and Senate Democrats have already presented a sweeping police reform bill in Congress. The coronavirus had a tremendous impact on the meatpacking industry. Now comes word other food processing plants were impacted too. The study from the Environmental Working Group finds at least 60 facilities have seen outbreaks. We are live from the Bloomberg Interactive Broker Studios. This is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. So if you were hoping to buy a house and then things, maybe got a little bit derailed because of the COVID-19 pandemic and what it's done to the economy, you might be wondering if now that things seem to be calming down a bit, it's a good time to buy or maybe not. And if you want to know which way housing is headed, some say just keep a close eye on the job market.
The residential picture is going to be 100% correlated to the job picture.
Mike Swell is co-head of Global Fixed Income Portfolio at Goldman Sachs.
So if we expect to continue to get America back to work and we can drive the true unemployment rate below 10%, we're likely not to have a housing market issue, whether on the price issue or whether on the rent issue.
And Swell says the housing market is way stronger than it used to be.
We don't have borrowers that are leveraged as they were before. We're really going to be dependent upon jobs.
And Swell also says, unlike 2007 when the housing market crashed, housing right now is in short supply. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Connecting decision makers to a network of news. If you can build that flat pack wardrobe without looking at the instructions,
you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
How many people are going to come away from this experience deciding, hey, we don't need a fancy office in downtown Manhattan. We can work from home. We have our computer. We have our ability to get on the internet, to have Zoom broadcasts with our colleagues. And why should we pay $100 a foot in rent to have a fancy office?
Dick Ravitch there, the former Lieutenant Governor of New York, the state of New York, on reopening this economy and how quickly people will get back to work, and whether some of these companies might change their mind about their footprint in a city like New York City. From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramovitz, counting you down to the opening bell. I'll step away, Tom Keene. I'll be catching up with Mike Powell of BlackRock a little bit later this morning to look ahead to that Fed decision and to try and understand whether what we've seen on the screens in the last 24 hours, the last week or so, is a durable rotation or something a little bit more speculative in the more riskier parts of this market.
Very good. Our great market coverage here will continue that forward into the open as well and through the day here at Bloomberg. I do want to mention Daniel Yergin on oil coming up later this morning as well. There is a reopening. There is a reopening across so much of the Bloomberg radio coverage of Washington, of Boston, of New York, the bigger cities, if you will. But far more, it is a reopening across this nation. We wanted to go narrow here. And so right now, for all of you from coast to coast, we take a real look at the New York market. Jonathan Miller joins us. He's with Miller Samuel, and he is truly encyclopedic on the national real estate market, particularly the residential market. John Miller, is there a permanence to people leaving the cities because of the pandemic? I just don't buy it. Is it true?
Well, so we're certainly seeing a surge in inquiries as people are looking, and we're also seeing an uptick in contract activity surrounding the outer reaches of New York City. However, I'm not really of the mind, at least this is some sort of permanent structural. We've seen this before in other crises where there's outbound migration for a couple of years. I think what really we want to see is what happens after, and assuming there is a vaccine, that's when the real permanence of this takes hold. Right now, people
Lisa
are
mentioned
cooped up. I mean,
John Miller, Lisa mentioned to me the price declines on Billionaires Row. I mean, we've got this fascination on the ultra rich. What are prices doing beneath Billionaires Row?
So really, at this point, we've seen very little price discovery because the brokerage community in New York State, and specifically New York City, is not allowed to physically show property. So there's really been, we're in this fascinating, unique period of very little transactional data. What we are seeing on the closing side, where people are trying to close deals or get out of deals that were signed sort of pre-COVID, we're not seeing patterns yet. We're seeing half of the transactions anecdotally that I've run into, there's no discounting, and half have a pretty narrow discount range. So until early July, I believe, when the state decides to go to phase 2, which allows brokers to physically show, I think we're going to see instant price discovery. We just don't have it yet.
Jonathan, I love speaking with you, especially at a time when there is so much transformation. And you talk about how New York City has always bounced back and that typically these out-migrations are temporary. But is this time different because of the work from home dynamic, the fact that many people are looking for more space and a more comfortable setting for their families at a time when they are more capable of working not in the major city center? Do you think that changes this entire landscape?
So I absolutely think that this time, and we always say this time it's different, and that's the component that's different. It's not so much about the virus and the density, it's really about the ability to work remotely. So as a result, we may see things change in the sense of second home properties end up becoming what I would call co-primary, where you'd have a primary residence, and instead of a sort of seasonal summer place, you really end up having something that's equal to your primary residence, so that you can go back and forth. The urban to suburban, I'm not confident that that's a long-term pattern, but I'm more confident of the second home market, instead of being sort of pummeled by downward economic activity, ends up being some sort of new market. This idea that the consumer thinks of a second home in its relation to the primary as an equal, instead of something that is less. And we're already seeing that in outlying areas like the Hudson Valley, like upstate Connecticut, like the Hamptons and the North Fork. Traditional second home markets are seeing a flood of inquiries coming out of the city. It remains to be seen how long that will be.
Jonathan, I got 1 minute. John, I got 1 minute left. Very quickly here, we want to go down to the low end of the market. Riley from St. Louis is thinking of moving to New York City and wants to know if studios are going to be cheaper by the time school starts in September. What do you think?
I think the answer is a very definitive no, because the lower end, even though that's where the concentrated job loss is impacted most, low interest rates and the absolute limitation on supply keeps that market pretty tight. Maybe not as tight as it was 3 or 4 months ago, but still very tight now.
John, it was only weeks ago you and I were living in studios. Jonathan Miller was 6,000 square feet north of New York. Thank you so much. He is with Miller Samuel as well. Lisa, I'm glad we digressed there. We talk about the Fed, but it really is about markets. And Lisa, I am absolutely stunned at the continued fixation on billionaire articles like the whole Wall Street Journal Mansion section and all that. Our fascination on that stuff I find crazy.
Well, look, John, Tom, there's so much there, because on one hand, there is just the pure fascination and drool factor of some of these homes. But this also has been an area where you've seen an incredible amount of building. And you've also seen a lot of foreign investment at a time when those issues are being particularly hard hit. You go lower down, the question, as our individual from St. Louis says, is, can I get a discount? And the answer is, it is unclear, depending on whether you are below that billionaire row, Tom.
Well, we hope everybody finds their abode in the coming months. Certainly in New York City, better news on this pandemic. We are going to continue through the morning. Lots to speak of. John Farrow looking at the markets in the next hour on Bloomberg Television. Paul Sweeney and I will drive forward the conversation on radio. Daniel Yergin in a bit. This is Bloomberg.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Get your cook on with Asda. With Uncle Ben's rice, 250 grams for just £1. And our Butcher's Selection chicken breast fillets, only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
Dear Dad, happy Father's Day. You are my rock, my go-to guy. Whenever I call, you're happy just to listen. You've always been there for me, by my side. I don't know how you put up with my piano playing all those years. Hang on, kiddo. I'll listen in a sec. I miss you. See you soon. Love you lots, Luce. This Father's Day, send love straight to Dad's door with moonpig.com. Download the app today.
Who says you can't have a laugh while getting serious about America's pastime? On the daily podcast Locked On MLB, comedian and baseball fanatic Paul Francis Sullivan talks about each team, each pennant race, and everything else in the game, from rule changes and controversies to baseball cards and stadium food.
For those of you who are not familiar with me or the old show, I love to obsess over baseball. I'm talking baseball over the Super Bowl. We had a TV showing the division series during my wedding.
Search Locked On MLB on TuneIn to listen today.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Hi, this is Mike Tirico, introducing you to Sports Uncovered, the newest podcast series from the storytellers at NBC Sports that will shine a fresh light on the most unforgettable moments in sport.
The reason why I'm smiling, I might get in trouble for this.
Search Sports Uncovered to start listening today.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
In a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
There's no other way to
to say the world economy is in awful shape.
Whether it's a few months or 18 months, eventually it will come to an end. The economy will revive.
Finance.
Many people take the Fed to task. I think the Fed should be applauded.
We only have limited tools. It's up to the fiscal authorities to do something about it.
Investment.
In a couple of years from now, things are going to be back to probably where they were at the very beginning.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from New York City and points beyond to our worldwide audience. And another sign of the gradual reopening of the economy, Macy's surged as much as 17% in early trading after announcing it has reopened about 450 stores in some capacity. A risk-off feel to the markets this morning as equity futures point lower after an astounding 45% move off of that late March low. Let's get some color on those equity markets. Let's go to Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at right here?
Well, since you mentioned Macy's, Paul, we can certainly start there. It's one of the most active stocks in early trading, now up about 7.5%. And it's not just that those 450 locations for the department store chain have reopened, at least partially. It's also they talked about having what they call a clean inventory position at the end of this fiscal quarter. So in other words, they're able to sell the goods that have been lingering in warehouses or store shelves or wherever, plus the fact they lined up $3.15 billion in credit backed by unsold goods. That makes up the bulk of $4.5 billion in liquidity that they got. So put it all together, Macy's shares higher in early trading. You can't say the same for the travel stocks, though. They've had quite the run up the past few days. The S&P 500 Airlines Index up 47.5% in the last 6 days. Biggest advance for that kind of time period since the index was first calculated in 1989. You're seeing the airlines pulling back in early trading. American down about 8%. Delta lower by 6%. United lower by more than 7%. Similar story for the cruise lines. Carnival, Royal Caribbean, Norwegian, all down at least 5% in early trading. You're seeing the oil stocks pull back after a surge yesterday. ExxonMobil down 3%, Occidental Petroleum down 8.5%, Apache down 6%, and maybe the most extreme example, Chesapeake Energy down 44%. People with knowledge of the matter said the shale producers preparing a potential bankruptcy filing that may give senior lenders control of the company. Now, Chesapeake declined to comment. Bear in mind, in the last 2 days, Chesapeake's shares rose almost fivefold. So you're talking about quite the reversal today. Hanesbrands up 1.5%. The apparel maker named Steve Bratsby as CEO effective in August. He was Walmart's chief merchandising officer before leaving in January as part of an executive reshuffling. You got a couple of earnings reports to talk about. One of them from Brown-Forman, the maker of Jack Daniel's whiskey and other spirits. It's up 1%. Fiscal fourth quarter sales beat analyst average estimate in the Bloomberg survey, though earnings came up a bit short of projections. And then there's Tiffany up 2%. The luxury jewelry retailer reaffirmed its commitment to a $16 billion takeover by France's LVMH and said this month's sales in China have surged 90%. Now, Tiffany's fiscal first quarter results were worse than analysts expected. A couple more for you. Aptiv is down 6%. This is an auto parts maker. They're selling $1 billion of common shares and another $1 billion of convertible preferred shares. And we have to talk about Nikola. That would be the first name of Tesla. Not the company, the man that the company was named for. In any case, it's a developer of electric and fuel cell trucks, and it's up 18.5% in early trading after more than doubling yesterday, which was its third day as a public company. Nikola went public last week by merging with a so-called blank check company. And get this, Nikola expects to have no revenue this year.
Wow, that's, it's interesting. When you think about some of these IPOs we've had over the last couple of years, Dave, that whole cash burning scenario has kind of lost its luster with some of these IPO investors.
But not with Nikola, I'll tell you. I mean, it really gives you a sense of just how speculative the market has become lately. We've seen it with the travel stocks, you've seen it with the energy stocks, and now you're seeing it with this developer. They haven't even started making the electric vehicles, but they're working on them.
They're working on it. Bloomberg Stocks editor Dave Wilson, thank you so much. Well, after months of being shuttered by the coronavirus pandemic, the doors at federal courthouses around the nation are slowly starting to swing open with the convening of socially distanced grand juries. To get a sense of what's really going on there with our federal courts, we welcome Bloomberg Law Judiciary reporter Madison Alder. Madison, thanks so much for joining us. So what's going on at the federal courts? They've effectively been shut down, haven't they?
Yeah, a lot of operations were canceled at the beginning of the coronavirus pandemic. Nearly every federal court suspended or canceled jury proceedings, restricted access to courthouses, and started using things like video conferencing to do a lot of its regular work. But a lot of those bench trials, grand juries were one of the things that were canceled. They just weren't happening. And now what we're starting to see is a return to a somewhat normal operation with grand juries restarting in at least 10 of the 94 federal districts.
So what's this mean? If someone's sitting in jail waiting for a grand jury or something, I mean, is it just literally the judicial system has really effectively shut down for several months here, waiting to get restarted? Is that kind of where we are?
So there are a few ways around a grand jury at the federal level, but if you are wanting to, dispute anything in your case, or you believe there isn't enough evidence, you want that grand jury. And even though there's kind of this joke among lawyers that you can indict a ham sandwich, the federal grand jury is still a very important part of the legal process. And for a case where you feel like evidence might be lacking, that's a really important tool for defendants.
So, I mean, are there concern among maybe defenders, lawyers that, gee, maybe my client is not getting due process here? Are there concerns about, as these courthouses reopen, that maybe it's not going to, in fact, be business as usual?
So that's exactly right. One of the things that we've been seeing a couple of courts do so far is a video kind of version of a grand jury. So instead of having the normal 16 to 23 people in the same room, which, as we know, during the coronavirus is not a great idea, they're splitting people up between different rooms or even different courthouses and connecting them via a video conferencing platform. That's something that defense attorneys are saying is not a great idea when it comes to a jury, because the video, they say, could disconnect people from the gravity of the decisions that they're making. So video is something that a lot of defense attorneys are not on board with, but they do agree with other, social distancing measures. I talked to one attorney that said if you use one of the larger, more ceremonial courtrooms in these courthouses and separate people out that way so they can still see the witness, they can still get the same presentation of information that everybody else is, then he's okay with that.
So is there just an extraordinary backlog here? Because I suspect that, police departments around the country are still making arrests. So is there just kind of a backlog here that's building, and because the courts have effectively been shut down?
Yes, I spoke to a federal judge. He said this is the reason why virtually no indictments have been filed. There is a backlog that's brewing. It's going to affect some courts worse than others, especially those that have, fewer judges, fewer seats filled. But yeah, this is going to be an issue that courts are going to have to grapple with for quite some time after the pandemic is over.
So what's the feeling here? I mean, you think about it, in the federal courts, you feel like they've always been kind of, overdone to begin with. What's the plan to kind of get back on track? Is there any way to kind of bring down the backlog that has been building over the last several months? Are there any special plans to kind of accelerate maybe some of the processes as these courthouses begin to open up?
No plans to accelerate yet, but the Administrative Office of the U.S. Courts did put out some guidance on how courts should go about reopening. So it's kind of a phased approach, 4 phases. Grand juries are part of those first 2 phases. They're options that courts can do. And a lot of this is based on what the local health concerns are. So, for example, one of the first places that we saw did a grand jury at the beginning of May was the District of Montana. Montana has one of the least amounts of coronavirus cases of any state. So these states that have the least cases are probably going to be the testing grounds for a lot of the procedures that the other courts, especially in the areas that we've seen particularly hard hit, like California, New York, Washington, they're going to be the testing grounds for those states to look at when they're doing their own restarting, they're doing their own reopening. Unfortunately, we're really at the beginning of this. The beginning of restarting. So I think everyone's kind of trying to figure out where things are going to land.
Madison Alder, thank you so much for joining us. Madison Alder, she's Bloomberg Law Judiciary reporter, giving us an update on what's going on with the federal courts as they begin to slowly reopen on kind of the back end of this pandemic, trying to get back to some business as normal. Right now, let's get world and national headlines with Amy Morris. Amy, what do you have for us?
Well, Paul, it is happening slowly, but it is happening. Americans getting back to work. New York City started reopening its doors exactly 100 days after the state's first case of COVID-19. Now, Governor Andrew Cuomo says infections are at the lowest level since the pandemic began.
We went from the worst situation in the nation, frankly, one of the worst situations on the globe, to not only flattening the curve, but to bending the curve.
At its peak, the virus killed more than 500 people a day in New York City alone in early to mid-April. That number has dropped now below 24. As many as 25,000 stores in the U.S. could close permanently this year. That is almost 3 times as many as last year when closures hit a record. Retail and tech data firm Coresight Research says most of those closures are expected to occur in malls. The coronavirus pandemic has devastated an industry where mall-based retailers were already struggling. The push to overhaul policing in America is likely to work its way into fiscal 2021 spending negotiations. Just another significant challenge that appropriators did not foresee at the beginning of this year. House Appropriations Chairwoman Nita Lowey and others will discuss police and criminal justice policy changes with authorizing committee leaders. And GOP Chairwoman Ronna McDaniel tells Fox that the Republican Party expects to make a decision on a new convention site within a week or so. She says they have offers from, in her words, all types of states looking to host the convention. She says they've received interest from Oklahoma, Georgia, Florida, Texas, Tennessee. The Republican National Convention is currently set to be held on a smaller scale with masks and social distancing in Charlotte, North Carolina in August. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Tom and Paul.
Amy Morris, thank you so much. We appreciate that. Tom, a little bit of a pullback in the market today, a little bit of a pause here. Anything to make of this, or is just in your mind kind of just a healthy, let's just step back here?
You know, the addiction, Paul, I mean, you're in the triple leverage go-go fund, and you're just making out like a bandit, and I'm still not in. Some people waited for Dow 10,000. I think I'm waiting for Dow 100,000. It's a what we can say for certain, folks, is it's correlated a pullback. We'll do a data check here on a beautiful New York day in a moment. Bloomberg Surveillance, always brought to you by Cohn Resnick Advisory Assurance Tax. Cohn Resnick can help your business mitigate disruption and mobilize for the future. Visit their coronavirus resource center today, cohnresnick.com/COVID-19. And of course, the data that Paul's talking about has been substantial, to say the least. I'm bringing it up right now. I've got the terminal on my iPhone, which is beyond cool. Paul, I don't even know why I need the fancy screens anymore. I mean,
the screens are like fun. They look cool, but you can do it all on your phone, right?
Yeah, Damien's got like 12 screens.
Yes, exactly.
It is beach house, but I've just got this one screen which tells me the VIX back a stick 26.68, futures negative 32, 31.96 on S&P level. Dow 27.196, Dow futures down 327, and yes, yields higher this morning. Stay with us, Paul Sweeney and Tom Keene. This is Bloomberg.
Imagine being denied an apartment because of your religion or your race, or because you have children or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
A police officer.
Someone who protects the people.
Protects the vulnerable.
Focus on doing the right thing.
Building trust in your community.
Representing one. Representing all.
Someone who is there in times of uncertainty.
Every day is different. As a police officer,
you can make an impact.
Now's the time to make your difference. Become one of the 20,000 new officers. Search Join the Police.
when family video calls are too good to miss. Your virtual quiz team is demanding a rematch. And one more episode just isn't enough. You need loads of data. Get a massive 30 gig for £10 a month from Smarty Mobile. With no speed restrictions, unlimited calls and texts, and a flexible 1-month plan, it's no wonder you Switch awarded Smarty Best Value SIM-Only Network 2020. Search Smarty. Simple, honest mobile. See smarty.co.uk.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And U.S. stock index futures and European equities are sliding on concern that the blistering rally in risk assets has overshot the economic recovery. Declines in the U.S. pre-market ran from oil drillers to cruise lines. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures down about 30 points. Dow futures down 308. NASDAQ futures down 24. The DAX in Germany is down 1.7%. 10-year Treasury up 16/30 seconds, yield 0.82%, and the yield in the 2-year 0.21%. NYMEX crude oil is down 0.4% or 15 cents at $38.04 a barrel. COMEX gold is up 1% or $17 to $17.2220 an ounce. The euro 1.1307 against the dollar. British pound 1.2670, and the yen is at 107.86. Tiffany said it remains committed to a sale of LVMH following reports that the French luxury giant's $16 billion deal for the jeweler was threatened by the effects of the coronavirus and U.S. social unrest. And Macy's up almost 6% this morning after announcing it has reopened 450 stores in some capacity and expects to exit the second quarter with a, quote, clean inventory position. That's a Bloomberg Business Flash. Tom and Paul.
Thank you so very much, Karen Moscow. We appreciate that. You know, we're thinking about the markets here. We look at the S&P up about 45% from that March 23rd low. I mean, we've seen markets around the world kind of rally. Let's get a sense of what's been going on with some of these European markets. To do that, we welcome Tim Craighead. He's Bloomberg Intelligence. He's a European strategist for Bloomberg Intelligence based in London. Tim, thanks so much for joining us here. Give us a sense of kind of what you're looking at here as these markets have really staged an extraordinary rebound off the bottom. Where are you seeing opportunities in some of the European markets that you look at?
Yeah, thanks, Paul. Nice to be here with you guys. So put things into a little bit of context, if that's okay. You mentioned the U.S. rip that we've seen in the market. It's been different over here. There was a few-day bounce back in late March. But for a couple of months, most of the European markets were really sort of stalling and only up a couple of few percent. And it was a very defensive, high-quality period of time. So the opportunity at that juncture was in healthcare, staples, things along those lines. Remember, we don't have such a big internet and tech sector over here that's got the substantial weight that you all have on your side of the pond. Over the course of the past 2 to 3 weeks, things have started to shift, and we've clearly seen more of a cyclical tilt come into the marketplace. There's no doubt there's been a big bounce in energy and financials off of rock bottom levels, but the core industrials and materials have also been picking up. And, one thing that we've been looking at, here closely is specifically in the UK market, as opposed to necessarily broadly across the rest of Europe, how this relationship between cyclicals and defensives is starting to roll over a little bit from what's been actually more of like a year and a half tilt towards defensive. So it's something we're thinking about quite carefully.
Tim, I actually went to the Bloomberg a couple days ago, and this is in your wheelhouse, and I looked at a major bank in Europe and their share non-performance over 10 years and 20 years. If that was in the United States, institutional shareholders would be in an uproar. Are they in an uproar over in Europe? I mean, the underperformance, chronic, low single-digit, garbage performance, is that tolerated in Europe?
It's a good question, Tom. I mean, there's certainly activist-type activity that happens over here, but it's also a very different macro backdrop. If you go from the global financial crisis to today, skipping COVID, for the moment, earnings in Europe are only back towards peak levels that have sort of capped out for the Euro Stock 600, market overall, not just looking specifically at banks, but broadly speaking, earnings have been flat to lower and back to flat again over the course of the past 10 years, as opposed to the U.S., where we've had massive earnings growth. Part of that has been Eurozone crises that have happened. Part of that's been angst with Brexit. Part of that's been a different economic makeup, more cyclical, old-style businesses here, as opposed to information technology, et cetera, from a U.S. perspective. So I think you also have to keep that in mind, and the progression of earnings over time, that, if we put the crisis behind us with the pandemic, there are some subtle changes that are starting to shift where higher growth industries are actually starting to take off. And if we actually ever get out of negative interest rates, then maybe you'll actually see earnings trends come back for the financials. That's been a huge weight here relative to the U.S. as well.
So, Tim, kind of going into this pandemic here in the States, the economy here was generally in decent shape, and I think the expectation, given all the federal stimulus and the fiscal stimulus coming out of Washington, that there will be a light at the end of the tunnel. How about what's the feel in Europe as to the economic outlook as we kind of get to the other side of this pandemic? What's the outlook just for general economic activity?
Yeah, it's interesting. I do think that optimism carries globally. We're coming out quickest in Asia. Europe and U.S., depending on the area, the region, the locality, frankly, aren't going to be all that different. There's different styles of stimulus and support. Over here, it's been more about furloughing workers so they can maintain income, where in the U.S. it's been more about unemployment benefits and things along those lines after you're let go. But in both cases, certainly here in Europe, things are starting to loosen up. Activity is starting to come back. Traffic is starting to pick up. The favored buzz, high frequency data is starting to show signs of life. And, I think there's a general feeling of opportunity as we look into the summertime. A lot of times that's a period over you get to July and August and it's down.
Tim, that's why you moved there.
Yeah, exactly.
Unfortunately, it doesn't apply at Bloomberg or to our types of jobs.
Oh, thank you. Craig had disclosure. Tim Craig, thank you. So much with Bloomberg Intelligence working the entire month of August, only one in Europe.
But Tom, I remember he rides his bike. He rides. This bike from the outskirts of London into the Bloomberg office at Queen Victoria Street every day.